taught that class. So let's go to question 4. That is where we're supposed to start from. Let's go to question 4. That is where we're supposed to start from. And I read the question. It says, Ongeza Limited, a local company operating in the mineral water bottling industry, is in financial difficulty due to the unfavorable economic conditions. The company's statement of financial position as at 31st, Ravi, you are interfering. I don't know what is wrong. The financial position as at 31st October 2021 was as given below. So let's check their financial statements. So Ongeza Limited statement of financial position. So in their balance sheet, we had land, building, machinery, intangible assets, current assets, inventory, trade receivable, cash, equity. We have equity shares of shillings 10. Preference shares were also at shillings 10. 12% debentures. Then interest payable on debentures. Loan from directors. Then we have accumulated loss. Current liabilities, we have bank overdrafts. We have sundry payables. Additional information, number 1, the authorized share capital of Ongeza Limited is 5 million ordinary shares of shillings 10 each. Okay. And 1 million 10% preference shares of shillings 10 each. As we move forward in financial reporting, anything they are talking of authorized, that is not your concern. We don't use authorized share capital. We use issued. So if the authorized are the issue, then that is well and good. But in accounting, we use the ones which have been issued to the public. So you were authorized, Wachana and I. It was decided during a meeting of the shareholders and directors of the company to carry out a scheme of internal reconstruction with effect from 1st November 2021 as follows. So assets were to be adjusted to their fair values as follows. Trade receivable, inventory, machinery, buildings, accumulated depreciation, building machinery, as you can see. Each ordinary share is to be redesignated as a share of 2.5. Initially, it was 10. So if they redesignate to 2.5, it means a shareholder is losing how much per share? 7.5. Eh? Yes, so a shareholder is losing 7.5 per share. The ordinary shareholders are to accept a reduction in the nominal value of their shares from shillings 10 to 2.5, no problem. In addition, the shareholders are to subscribe for a new issue on the basis, na niliwaambia ukisikia subscription in accounting, you think of what? Cash book. Subscription means they will have to pay. So the existing preference shareholders, in addition, the shareholders are to subscribe for a new issue on the basis of 1 share for every 2 held at a price of shillings 4 per share. No problem. The existing preference shares are to be exchanged for a new issue of 6,015% preference shares of shillings 10 each and 800 ordinary shares of shillings 2.5 each. No problem. No problem. The debenture holders are to accept 200 ordinary shares of shillings 2.5 in lieu of interest payable. The 12% debentures are to be converted to 14% debentures. A further shillings 2 million of the 14% debentures of shillings 100 each are to be issued and taken up by the existing debenture holders at shillings 90 each. No problem. Shillings 800 of the loan from directors is to be cancelled. The balance of the loan is to be settled by the issue of 200 ordinary shares of shillings 2.5 each. The investments are to be sold at their current market price of shillings 6 million. The bank overdraft is to be paid in full. A sum of 3.18 million is to be paid to offset the sundry payables immediately, and the balance in 4 equal installments at the end of each quarter. All intangible assets are to be eliminated. It is estimated that under the new arrangement, the net profit before interest and tax will be 5 million per year, 5 million per year. There will be no tax liability relating to the company for the next 5 years, no problem. Required journal entries to effect the scheme of internal reconstruction, statement of financial position immediately after reconstruction, then a statement showing how the anticipated profit under the new arrangement will be distributed to the various providers of capital. Sini story. Adam nakumbuka namba 3 ilisema nini? So let's start with journal entries. Hizo journals mnajua. You see the way we were doing a capital reduction account, we were saying debit this, then credit capital reduction. So that's not what we will be doing. Utakuwa naandika. Christian, check what is happening. You are taking my host, unapotea nayo, sometimes inarudi. So I don't know what is wrong on your end. So right there, journal entries. Itakuwa record. Usichore kitu ndogo, hiyo weka hata kitabu yote mpaka chini. Wale wako na kitabu ndogo hata chora hivi. Hiyo ni kubwa sana. So right there, I'm sitting wacha tuachie watu wataingia leo. Right there, journal entries. Journal entries to effect the scheme of internal reconstruction. So just do something presentable. So let's have that. So this is the shillings are in thousands. So have that. Have something very presentable. So I make up the details. And now, as the answer. So have that. Those who are joining now online, have that very fast. So let's start. Christian, ebu log out kidogo, then you log back in. There is an issue on my side and your side. Abraham, just log out, then check back, then log back. All right. So let's start. Let's start. Pole without struggling. I'm just waiting for the one I told to log out to log back. Just a segment natolewa alafu atatua na. So number one. So journals, you pass them as per the numbers. Journals we pass as per the numbers. So unaenda tu number one, unasoma tu, unaelewa, unajiuliza which account to debit and which account to do what? To credit. There is nothing much. Ukishindwa, ukishindwa yani haujui kabisa which one to debit and which one to credit. Zote unaandika capital reduction, utapata moja. Hiyo umeshindwa beyond, lakini unaweza shindwa kweli? Huwezi shindwa. So let's start with number one. Let's start with number one. The authorized, yes. The authorized share capital of Ongeza Limited was 5 million ordinary shares of shillings 10 each, and 1 million 10% share preference shares of 10. Mambo authorized, I said we don't want. In accounting, we use what has been done, what? Issued. So authorized, we don't want. The story of authorized, that one we don't want. So that one ignore. It was decided during a meeting of the shareholders and directors of the company to carry out a scheme of internal reconstruction. To carry out a scheme of internal reconstruction with effect from 1st November 2021 as follows. So, you know what we are going to do with the assets. Eh? You check whether there was a gain or there was a loss. So, initially on the questions we were doing before, we were like again on the asset, we were debiting the asset offhead, then crediting which account? Capital reduction. So you debit that asset, then you credit capital reduction account. So let's start with trade receivables. Let's start with trade receivables. So trade receivables, it was adjusted to 36. What was the book value of the trade receivables? 4,000. We lost, we gained from what your eyes can see. We lost, so it is up. So lost, what do we do? We credit that asset. Then we debit capital reduction. So just come up with the capital reduction, but don't, because the assets are many, we can compress them in capital reduction. So for now, just write capital reduction, then you leave it hanging, then we bring all those assets, then the lump sum figure we can take there. So capital reduction, leave it hanging, but you have said we credit which account? Trade receivables. Trade receivables, you have said we credit with how much? 400. Next. Inventories, 64. Book value, 72. Loss, eh? So that loss, how much? The same thing. So inventories, that is a loss of how much? 800. Back up. Next, machinery, but things like machinery, there was accumulated depreciation. So can you work it? Then you tell me. Be careful. Machinery, where's machinery? It is easy, but I think maybe some people went wrong. Let me hear from your side. Machinery, we credit, we debit with how much? Just tell me the figure. Credit with 2,300. How much? Where's somebody there? Online, you can post there. So, Anne is saying 800. Yes, it is 800. Unaona your depreciation. I think the depreciation is the issue there. Eh? It was just meant to confuse students because already, you know, when you are adjusting to fair value, you don't adjust to fair value, then you attach depreciation. Ukita value, akwambia this machine is now this much. Una depreciate here. So the accumulated depreciation should be on the initial cost. And the initial cost, examine already net book what? Value. So if you go on cost, I will have taken the cost, we subtract the accumulated. In fact, don't take the fair value minus the accumulated. Take the cost minus the accumulated, then you compare with the book value. So by the virtue of them saying net book value, they have already subtracted what? Depreciation. So najua waliweka hapo chini wakasema hapo tutawashika. So 800. So machinery 800. Next. So mambo ya depreciation watara nayo kabisa. Don't even focus on it. In fact, andika hapo. We know you very well. It was meant to bring confusion. Then buildings 5 versus 6. Yes, 5 versus 6, that is 1. So that one you credit. So buildings 5 versus 6. Oh, loss also, eh? Loss of 1. Now land equal to evil. Land was not anywhere. How possible? If it's not there, it is not there. How many land at buildings? Is there land somewhere? If it's not there, it is not there. To Songa Mele, we move forward. So number 1 is gone. Unless someone has an issue, there is no issue. So what you do, add all this, then post the capital reduction as lump sum figure. Someone is saying something. Someone is saying that machinery, that it should be again. What I wanted from people is machinery again. Judith is saying, according to her, it is again. It is again. Book value was 28. Then market value 2000. So how does it become again? So it's not again. So Mohammed is saying the aggregate comes to 3200. 3000. So post there 3000. 3000. Then always try to give narrations. Narrations, you write anything which makes you have what you have done. They are not standardized. But you can write on fair value adjustment. You can make a use of it to not have on fair value adjustment. On fair value adjustment. How comes land was not checked on? I hope the examiner is not misbehaving. Jemima is asking, what about land? But did they adjust the fair value for land? That's what I'm asking. Did you see land anywhere? Jemima, we have not seen land in Note 1. When we come across it, we will. If they have not adjusted its fair values, it remains like that. Yes, it remains like that. And when we go to the new balance sheet, we will still bring that value of how much? 8. Unless they give us their current market value. So that is over. So you say on fair value adjustment, you can write anything to restate the assets on the new values. So close that one. We go to number 2. Let's go to the number 2. So number 2. Number 2, Evans is saying 0.10. Evans. Na unanitumia direct message. Weka kwa class yote. 0.10. Let's go point by point. Wezi ruka. Point by point. Tukifika hiyo 10 tutaifanya hapo, sio? Let's go to number 2. Let's go to number 2. Number 2 says, each ordinary share is to be redesignated as a share of 2.5. The ordinary shareholders are to accept the reduction in the nominal value of their shares from 10 to 2.5. So when we reduce, what do we do to, let's work with one. What do we do with the share capital account when you reduce from 10 to 2.5? What do we do with the capital account? Debit. So debit ordinary, credit capital what? Reduction. So you come here and say, ordinary share capital, ordinary share capital, we are losing how much? You said how much per share? 7.5. Kindly check for me the capital structure to confirm how many ordinary shares were we having. In the balance sheet up there, check how many ordinary shares we were having. Ordinary 20 divided by 10. So we were having how many? 2,000. So multiply with the 2,000. Multiply with the 2,000. So when you multiply, what do you get? 15,000. Give us here 15. Give us there 15. Hebu tuache kihani kidogo. Kuna preference, attach preference hapo pia. You can also attach in the same note. Ama hakuna kitu kama hiyo, then tufunge hiyo. So ordinary share capital 15. Then we have said we are crediting which account? Capital reduction. Also how much? 15. Which narration do you want us to write? Which narration do you want? I said narration are not standardized. Na hapo ndio customer wanaweza jua watu kama walikuwa nakopiana kwa hiyo exam. Hakuna venye envelope moja iko na watu 50, kila mtu amenarrate the same thing. It's impossible. Whatever you narrate there depends with what you have done. Mtu anasema tunataka to record the reduction in par value. Mimi nitasema aje? At what I've done. Andika on redesignation. On redesignation of ordinary shares. Full stop. Don't cram the narration. Redesignation. Hiyo ndio tu amia. Unatafuta tu kizungu on what you have done. Let's go to number which one? Bado inaendelea. And then fanya hivi. Hiyo ni number 2 Roman 1. Then number 2 Roman 2. But see lazima ati number 1 I can even write number 3. Journals are not, they are not dependent. They are not independent. In the same number 2, they are saying, in addition, the shareholders are to subscribe. We will get to subscribe in accounting. Thinking begins after you have written what? Then God will bring things ahead. Anything subscription in accounting is on. We don't subscribe for stones. So they were subscribing for a new issue on what basis? 1 share for every 2. So get 1. They will get 1 for every 2 what? 2 L's. How many are we holding? How many shares are we having? That's the question. How many shares are we having? 2,000. Very good. We are having 2,000. However, in the cash book, they are subscribing at what price? 4 shillings. So multiply by shillings 4. So get 1 for every 2. We have 2. Multiply by 4. 4? 4,000. When you subscribe, see the value of shares goes up. Credit, ordinary share capital account. The shares are going up. Increase in shares, we lose what? The credit. So ordinary share capital will be 1 for every 2 at 2, but the par value is how much? At the 10, at the 7 point. What do they designate what value? 0.25. So in the capital account, you don't post anything above the par value. You maintain the par value. Or 2.5. Shillings 2.5 each. So in the capital account, you take the par value, the new par value. So this, that, you get 2,500. All right. Check here. We gave out shares with a par value of 2.5. These people subscribe at shillings how much? 4. That is called our subscription. There is an excess of how much? 1.5. That 1.5 goes to which account? Share what? Share premium. Over subscription means there is a share premium, which is 1 for 2 to 1.5. The over and above. Good. So that one is how much? 15. So 15. Nika kizungu na kufurahisha hapo chini on subscription of ordinary shares. On subscription of ordinary shares. Then we close that chapter. Close that chapter. We go to Journal 3. Let's go to Journal 3 for number. Note number. Note number 3. Sio na haraka, just relax. Hata unaweza ambia neighbor mwenye ako mbele akusongee uwekelee mguu, relax mode. Hatuna mbio. Kwani kasi na kesho? All right, so let's read number 3. It says, the existing preference shares are to be exchanged for a new issue of 6,015% preference shares of shillings 10 each and 800 ordinary shares of 2.5. So we are exchanging. We have talked to them that please, so what we want to do, we can exchange. So what was the value of the preference shares which were up there? The preference shares on top. The value. The value. 10. The total value. 8. So they want to exchange it with another one. This 8 was having preference dividends rate of 10%. So that is the rate of dividends. It was 10%. They have negotiated with them, I think, to prolong the period, and they have accepted. They want to exchange it. Instead of 8, they are going to take another one, which is 6, but with what percentage? 15. So just exchange. Just do a direct exchange. Direct exchange means eliminate the ones which are there. And how do you eliminate share capital? You debit or you credit the capital account? You debit. So debit preference, the ones which are there. So you will come and debit the 10% preference shares in full. Remove them. That is 8. But we are not eliminating them completely. We are eliminating them by giving them another one with what percentage? 15. So the one coming is the one you credit in the account. So 15% preference shares With what value? 6 million. Wakaleta shida, wakasema hiyo pesa haitoshi. So wakaongeleshwa wakapewa nini tena? Just continue reading. If there is nothing they are saying, then this is a loss to them which will go to capital reduction. But they have said something. What have they said? And 800 ordinary shares of shillings 2.5. So wamepewa ordinary shares. So right here, ordinary shares. They have been given 800, but at 2.5. So can you multiply 2.5 by 800? 800 by 2.5? 2,000. 2,000. Have they been compensated fully? Since 2,000. Are they fully compensated on the exchange? Yes. So we don't have any complaint. It was 8 we have exchanged for them with another one at 15. And again, the balance, we have given them what? Ordinary shares. You can just write there on exchange of the 10% preferred shares. On exchange of the 10% preference shares. All right, go to number 4. So number 4. That might be very long. So number 4. Right, I'm changing the camera. There. Let's go to number 4. Let's go to number 4. Number 4 says, and I read, the debenture holders, what madeni pia lazima to approach. So the debenture holders are to accept 200,000 ordinary shares of 2.5 in lieu of what? Interest payable. So even before we think of moving forward, let's do that transaction. So can you check how much was the interest? How much was the interest? Yeah, I've seen it. Interest payable on debentures and equity is 720. So they have accepted that we give them, instead of them asking for money, we have given them shares. So 2.5 times 200. 2.5 of 200 is 500. All right, so where shall we have? So that is forum and 1. You say you debit interest, no, debenture interest, payable. When you pay a liability, you eliminate the liability. So it was 720. So eliminate that liability. Eliminate the liability. Then credit ordinary share capital. So multiply that, then you credit. So ordinary shares will be matter what value. They were 200 at 2.5, giving you 500. So they accepted those shares in lieu of the amount owed to them. So any balance, because they have not said anything, any balance will be closed to which account? Capital reduction account. Put accounting in. Balancing figure 220. Yes. That is the only possible. Not possible. We have gained. When you check it on the company's perspective, we have gained. So you can say andika tu kizungu kidogo to compensate or to settle. Andika to settle will sound better. To settle debenture interest. To settle debenture interest. So that is how it was settled. Then we can go to 4 Roman 2 because we know the Igaisha. 4 Roman 2. 4 Roman 2. 4 Roman 2. So still in note 4. Still in note 4. They said what? A further shillings 2 million of the 14%. No, you're compliant, isn't it? Yes. The 12% debentures are to be converted to 14% debentures. So kwanza to convert. So that is a direct exchange. They are just interfering with the rates. So let's eliminate the 12%. Because when you are converting, it means you eliminate the one which was there. And debenture is a liability. To eliminate liability, you debit the liability account. Then you credit now the one which will be there, which is 14%. The value remains the same. I think they just negotiated on the rates. So this is how much? 6,000. 6,000. On conversion, just say on conversion of the 12% debentures. On conversion of the 12% debentures. Then Roman 2, Roman 3. Tunaona igaisha, hiyo number 4 igaisha. Safari continues. Safari continues. A further what? A further shillings 2 million of the 14%. Now the new one. 14% debentures of shillings 100 each are to be issued and taken up by the existing debenture holders at shillings how much? 90 each. So when they take up, we debit which account? The cash book. That's what they'll say. Yes. A further shillings 2 million of the 14% debentures of shillings 100 each are to be issued and taken up by the existing debenture holders at how much? 90. When they take up, since certificates wanachukua in exchange for what? Cash. So debit the cash book. So cash book will be how many debentures did they issue? Then I multiply by 90. They issued how many debentures? The value of the debenture was shillings 2 million, but each debenture was having a par value of how much? 100. So to get the number of debentures, take the shillings 2 million, take the shillings 2 million, divide by shillings how much? 100. Sure. Times shillings how much? 90. Wait. So that's 1800. 1800. But remember, the debentures they gave out, the certificates which they issued out, the 14% debentures, they issued out with a value of how much? 2 million. The one were undersubscribed. They issued with a value of shilling how much? 100. But those people exercised all they bought them at shilling how much? 90. So the difference will be a loss to us. So that loss to capital reduction, that is the balancing figure. How much is this? 200. We issued shillings 2,000 of the debentures. So when you issue a debenture, that is a loan you are borrowing. So the debenture account must be credited with shillings how much? 2. But labda because hatukuwa na pesa tumebet kidogo, hata mkilipa 90 ni sawa. Au wakafurahia wakalipa 90. But the loan will remain at how much? 2. So that loss will be in our books. Then you say on issue of new 14% debentures. On issue of new 14% debentures. That is gone. I think number 4 is now exhausted. Let's go to number 5. Let's go to number 5. Let us go to number 5. Let's go to number 5. So hapa kuna cramming, you just have to understand. Once you understand it, will be kuna issue. So number 5, shillings 800 of the loan from directors is to be done what? Is to be cancelled. Hiyo loan ni ngapi kwanza? Butu itafute huko. Loan from directors under equity is how much? 2,000. So they have said 800 they are cancelling. The balance of the loan is to be issued, is to be settled by issue of 200 ordinary shares of 2.5. So let's do them separately. Those are 2 separate issues. So 1, director's loan, we agree that is a liability. So if you cancel a liability, debit the liability account. True? Yes. So debit here, directors, loan what? Director's loan account. You debit with how much? Yeah? 800 to cancel. Yes, debit with 800. Then you credit which account? Capital reduction. Directors for the cancel, that is benefit to us. So capital reduction, 800. Because for a cancel, in course there is a benefit to the company because the waiver. So that is capital reduction. You can just say on part cancellation, part because they have not cancelled everything. On part cancellation of director's loan, part cancellation of director's loan. Then Roman 2. Roman 2. Roman number 2. Hiyo loan nyingine umesema nini? The balance. The balance of the loan is to be settled by issue of 200 ordinary shares of 2.5. Imagine right now in the new syllabus, watu wametoka BCom, bado wanaanzia section 3 kweli? In the new syllabus. Wanaanzia section 1. So they are doing effect na wanafanya QA section 2. Ndio wakuje juu. One of the reasons nilileta ni watu walikuwa wanatoka campus direct wakikuja. Hey, at liabilities due at debit, what is that? So I will when the debit and the credit section 1 kuja huko juu. So si nyinyi mko sawa? Basi tuendelee. Ama tuende tuseme pia ukimaliza mwende double entry. Alright, so let's proceed. So the balance they were given what? So debit the loan account when you are interfering or the process indicates that the liability is reducing, then the liability account must be debited. Reduction in liability is debited. 2.5 shillings, 2.5 times 200. Sure. That is not correct. The balance you want to cancel. Eh? How much was the balance? 2,000 minus 800. That is the balance they are settling. This minus this, 12. Sure. And they are settling by giving out what? Ordinary shares. So they are giving out ordinary share capital of 200 times 2.5 each. Examiner is being nice, telling us at 200 at this. They are not supposed to tell you. Wakisha accept the scheme. So they accept from 10 to 2.5. Then anything now coming below that, you use the new par value. So it's not about they keep on telling us the 2.5. It is you to know. Once they accepted, any transaction thereafter will be based on the new par value. How much is that? 500. Okay. So in the balance when some of our shares. Na pia sometimes shares unaambiwa nao shareholder like kupea kila kitu. Hiyo wanapoteza capital reduction. Wanasema wacha tuende tukae huko because tutapata dividends as time goes by. How much? 700. On full settlement, on full settlement of the director's loan. Ama unasema to settle the director's loan. Narrations. Usichukue narration ikiwa serious. Even you too, I know majority of us wako office or have been in the office once or ile unapelekea mkubwa report na kwambia enda hiki tumeandika, enda unieleze nini umeandika. So unaandika hapo have paid directors. Hata hapo unaweza andika hapo payments to directors. Anything which you have passed there, you just write. Let's go to number 6. Number 6. The investments are to be sold at their market price of how much? 6 million. When you are selling, which account do you debit? Cash book. Yes, so debit the cash book. Debit the cash book. Debit the cash book. They have sold it at how much? 6. Eliminate those investments from the books. Because once you have sold an asset, the asset is no longer there. So credit investment, but at its book value. So go to the balance sheet and check investment at a book value of how much? Investment at a value of 45. So the balancing figure will go to which account is again to us. Which will go for capital reduction account. It is again. So capital reduction 15. You say on sale of investment. Are you understanding? Unajua mmenyamaza na kuna maswali na ulizwangwa. Kwa nini hamna maswali? There are some questions in circumstances whereby ama zitakuja towards revision. I came across I came across a certain question somewhere, or they will come later. Let's proceed. Go to number 7 as I prepare this. So number 7. Ruth, you know my main objective is that you pass. So you're aware. And even the other person, the other one. So this ile stress mwalimu anakuanga nayo is more than stress in nyinyi mnakuanga nayo kwa mtihani. That is the truth. Jennifer, from your honest opinion, do you care whether Christine will pass or not? Just be honest. It's the truth. She doesn't care. You are stressed about yourself. But you know, sasa mimi, I want to see Christine amepita. Wewe umepita, huyo mwingine. So ile stress iko hapa, si rahisi. Because assuming, just assume. God forbid, though it can't happen. And sasa jini wote sasa mnyangu. Hata naweza kuja tao. Because here, physical, I'm seeing like around 31 students. 70. So we are around 100. So about 100 wameanguka kwa jina lako. Will you even come to, lakini wewe ukianguka peke yako si unakuja tu. You are alone. So this stress tuko nayo what we have to share. So how do we share? You read. So unasoma si tuna deliver. Unasoma tuna deliver, then all will be well. Let's go to number 7, but it can't happen. Number 7. Sasa kwenye tumefika nataka sasa nyinyi mnisaidie. You tell me. So we are discussing as finance department. Sasa tunasema hii office sio? As finance department, what do we do? Number 7, the bank overdraft is to be paid in full. So fellow accountants, what do we do? Bank overdraft imelipwa in full. Sasa kuna confusion. Mkiniambia tu cash, what do I do with the cash? Yes, credit the cash book. Credit, the Amima is saying credit cash book. Which account do we debit? In the overdraft. The overdraft is a liability. When you settle, debit the liability, credit the cash book. That is true. So debit bank overdraft. Root swali yako ndio hiyo. Then credit cash book. Kama uko sure, Governor, kama uko sure, unaandika yenye uko sure unaandika vizuri. Ile ingine, because Mary nimesikia ukisema capital reduction. Then again you are saying cash book. Then again you are. So if you are 50-50, na unaona kingine inaanza na kana, account. Yenye umuhimu. Unacheza chini, sio? Utapata tu. Anasema so far pia amekuwa kupata. Unaanza. Bora jina ianze na kana, sio? Haya, how much was the bank overdraft? Bank overdraft was 3, so it is 3. On settlement of the bank overdraft or to settle bank overdraft, anything. Ile mdosi akisoma ameelewa kitu nimesema. Wabaya, by the way, hiyo narration, wanasema anybody yako andika narration, ngoa 3 marks, ngoa 3. Na sasa hizo ulikuwa na 50%. Wanakurudisha fellowship. So just like anything which makes you happy, they will not even read. Those narrations nobody will read. Failure to write. Unajua wenye wako 5 na 6 wamekaliwa na casket. Unajua mjui. You don't know. In every organization, wanasemanga this is our cash Nasema cash cow. Kuna pale wanapatanga revenue. Custom guess most of their revenue come from section 5 and 6. Kutoka hapa si rahisi. These are exit papers. Ile kuzungushwa unazungushwa. Those slight mistakes. So be thorough. Don't give them time and chance. Aya. Number 8. Number 8. A sum of 3.18 million is to be paid to offset the sundry payables immediately and the balance in 4 equal installments at the end of each quarter. Your balance, you are in a sheet. That one that didn't have a liability after reconstruction because quarter 1 to it to reconstruct. So that is not your issue. Your issue is on this 3.18. Someone to tell me boldly, how do we deal with the 3.18? How do we deal with the payables account? We debit the payables because of liability, then credit cash. So debit trade payables. Trade payables 3.18. We are working 1,000 CPB. That's 180. Okay, so this is that 180. Credit the cash book. Cash book 3180. On part, if it is not full, you say part. On part settlement or on part payment of trade payables. Ivoto. Aya, tunasonga mbele. Number 9. Number 9. So someone is requesting we read for them note 8. Huh? Oh, the numbering issue. Sawa, okay, sawa. So hata nimesema ameona. So the next one, all intangible words are to be eliminated. How do we eliminate the assets? The asset itself. How do we eliminate an asset? By crediting. So we credit those assets, then we debit which account? Capital transaction. So can we identify which are these intangible assets from this question? An investment. Investment haiko hapo ni hyphen issue, sio? Hiyo hyphen ukiangalia land ilifaa ikue investment hata tuliuza. So ni hiyo hyphen issue. So hapo chini we have goodwill, then we have patents and those two. So debit capital reduction. Debit capital reduction. I wish hii class ya fari kwange Sunday peke yake. Unakaa mrelax. Lakini ile nyingine early morning ile usingizi kwa hapo. Evening ile makaziriko watu wamekuja. Tafadhali tuwekange tu hii Sunday peke yake kwa FR. So credit goodwill. Then patents and trademarks. So goodwill was 6. Patents 5. Total. Sasa mtu atupe narration. What do you want us to write? Can you utasema ndio tutaandika? On elimination of intangible assets. Yenyewe hata kama ni kizungu tuandike kitu kama hiyo, usiandike to remove intangible. To eliminate intangible assets. Good. Number 10. It is estimated that under the new arrangement, The net profit before interest and tax will be 5 million per year. That is another story for another question. Part C. So that one ignore. We have eliminated assets, equity, liabilities, profit. The only thing remaining, which personally I always forget, but today I will not forget, and you're not supposed to forget. Accumulated losses must always be written off, whether they say, they don't say, you have to look for it, then you write it off. How much were the accumulated losses? 58. Yes, so 58. Credit which account? Debit which account? So the capital reduction. Yes, you eliminate it against capital reduction. 58. Then we credit P&L, profit and loss account. Because it is a debit balance in the P&L. So to eliminate it, you credit P&L, debit capital reduction, 58. To eliminate accumulated losses. And from one of the question, done. So check very fast and ask me questions. What about note number? So ask me any note apart from note 10. Note 10 is not related. Ama what if? What if, or in circumstances, what if the examiner decided it seems there is no question online, people are silent. Okay, someone is asking something. Do I have to do the entries in order? Ama nianze na ile inanifurahisha. Anza na ile inakufurahisha. Thank you. But why? Sasa tuseme ukweli, gani ifurahishi mtu hapa? Or you are not sure of, you are sure of the second. Like kuna from number 6 imesonga haraka. Sawa, basi hata na kufurahisha na kufurahishi fanye baadaye. Then kidogo online mnaandika haraka. Wait. 14% debentures and the cash book on note 4. 14%. Oh, I've seen this one here. They said they gave debentures. What? How much? 22. Debenture is a loan, so you give loan certificate in exchange for cash. But immediately we gave this loan of 2. These people decided they will be paying us 90 for every certificate we are issuing. So yours is to know how many debenture certificates did we issue. Total was shillings 2, but each was having a par value of 100. So we issued 20. So they undersubscribed. But the loan on your side, in the loan account, you will have to recognize the loan amount. So the difference is either you have gained, you have lost. So Anne, I hope that one you have understood. Susan, what is the issue? Susan is saying, online kuna maswali mingi yake. Kwa nini hamna maswali? Ati yenu inakuja? Au wanauliza nyinyi mkirekodi? What are we writing under note 1? Under note 1 means on fair value adjustment. Halima, on fair value adjustment. Maureen, Maureen, I think I've done what you are saying. The one for debenture and the cash book. Judy, Halima, done. Anne, I think yours is answered. I hope hakuna mtu nimeruka. Number 10, Mohamed, na number 10 imekufurahisha for long, hatujafika huko. Tukifika hapo utajionea tu. Number 10 as profit aingia hapo. Profit will be after. Sindio? See, after you reconstruct, umeanza fresh. On, sindio? When you start afresh is when you will get profit. So that one will be later. So building note 1, building iko na shida gani? Because people were talking about it from the beginning. What is the issue with buildings? Number 1, we agreed depreciation will not go anywhere. So ignore depreciation, that is 1. So the fair value, the revalued amount is 5, book value is 6. So there's a loss in value of 1. So I hope that is captured. Is that which criteria did you use to determine the value of assets in note 1? Which criteria did you use? How do we answer that one? You compare the net book value against the fair value. Online iso read the notes. How do you differentiate on item from cash book and capital reduction? Like which one? The cash book wakisema they are subscribing, there is payment, you cannot pay from capital reduction. So when Christian, when you are paying and you are receiving, those ones you receive or you pay through the cash book. Okay. I hope online hizo zimekuwa mingi zinashinda zikiruka. We can't see the board. Sitakuwa nasema any question. Ama they have addressed what you are almost asking. Okay. Ignore the depreciation, sure. Let's, before we go to the balance sheet required Roman 2, let's come up with capital reduction account. I always advise that because sometimes you find it is not balancing. You know, coming a balance sheet, but if it fails to balance, means they still have what is called a capital reserve. It will affect the balance sheet. So let's try to extract capital reduction account. We can do it here. Sure. Yes. But someone. So draw their capital reduction account. I want to fix it here. Capital reduction account. Sorry, you. So right there, capital reduction accounts. We'll even do the cash book. Cash book has been affected so many times. So capital reduction account. Capital reduction account. Capital reduction account. Do not ask, but let's check something. So capital reduction, it will now be very simple. Let's go to the journal. Journal 1, when you want a capital reduction, we just pull them. So we pull them from the journals. So hakuna kusoma notes. So we go to journal 1. In journal 1, the capital reduction is there. So bring it here. And because this is a working, we can just compress. Let's do it. This is supposed to be done. Let upper trade receivables. You could, someone, because these are working, you can just compress, then you say assets. Then you pull the value of how much? 3. But if it was required, one by one to get so many things. So let's do that. So capital reduction, we have receivable 400. Inventories, how much? 800. Machinery. Machinery, 800. Buildings, Buildings, 1. Buildings is 1. We go to the next. Number 2, there is capital reduction on the credit. It's appearing on the credit against ordinary share capital, 15,000. It's on the credit. So you pick it from the side it is appearing against that other account. In Journal 3, no. Journal 4, yes. Journal 4, Forum and 1, there is capital reduction on the credit against debenture interest. How much? 220. Journal 4, this, no. Journal 4, yes. Journal Forum and 3. It is on the debit against 14%. 14% debentures. It is there as 200. It is there 5 from and 1 on the credit. Director's loan, 800. Give us there. It is there in 5 from and 2 on the credit, again with the director's loan. With how much? 700. It is there again in Journal 6 on the credit with the cash book or cash book. 615. It's there on the credit 15. It is not there in 7. It is not there in 8. It is there in 9. With the goodwill. Goodwill 6. Patents. Patents 500. It is there in 10. Debit P&L. Accumulated losses 58. Question. Can you add to confirm? If you get a variation, you tell me how much before you post. $27. What's our part of no problem. So you are saying there's a variant of on which side? This side. Any variance we say that's a capital reserve. Because these are income inputs, these are losses. So these are capital reserve. 2720. If balances this side, you talk of goodwill, which is about a good sum. So we'll confirm there. Confirm there. I want to delete that one there. I want to cash book there. Then I will do the presentation. Let's do cash book, because cash book also may be affected so many times. So draw there cash book. Make a cash book. Cash book, cash book, cash book. So allow me to delete that. So cash book, cash book, cash book, cash book, cash book, kidogo. 2720 sound. So cash book. Was their balance brought down? Was it your balance? Yeah? There was check the current undercurrent, check the current assets. What I want to do is simple. This cash book, I want to use bank. So I shall use cash on the book because you know normally you cannot have available bank, then you have overdraft at the same time. So in accounting, aggregated. So we cannot have bank up there, then again overdraft. Doesn't make. If you have multiple banks, then compress them, then you give aggregate figure. So now because we have cash and overdraft, it is assumed that cash in what? In hand. In hand. Cash in the cash in hand. Overdraft is the one representing bank. So allow me to reconcile this, and all other transactions will assume that they took place through the what? Bank. So bank overdraft, which is the bank that's broke down. So bank overdrafts, how much? 3,000. Yes. So we go to the journals. We go to the journals. Go to the journals. So journals, journal 1, check your journal 1. Cash book not there. Journal 2, no cash book. Journal 3, yes. On the debit side with ordinary share capital. So ordinary share capital, debit. No, it's on the debit. So ordinary share capital, debit, how much? 4,000. Then journal 3, no. Journal 4, no. No, journal 4 and 3. There is cash book on the debit, 14% debentures. 14% debentures. How much is this? 18. Loan, no. Una, journal 6. Cash book is on the debit against investment. So there is an investment which was sold. 6. Good. Then journal 7, bank overdraft. So you use 3. Other delete one in full, which is okay. It's still okay. Yeah, so that's fine. Journal 8, cash book on the credit payables. So payables 3180. 9, no. 10, no. Nothing. Give me the balance. Balance seems to lie on which side? That side, eh? Come on. Sure. Yes. So balance carried down. Yeah, we have credited. That's why I have not repeated. Wacha kufikiria sana. Si ni cash book overdraft tukilipa tuna credit. Si ndio tulikuwa tumeweka hapo. Unataka we cancel? Una cancel cash book ama una cancel overdraft itself? Si ni overdraft ukilipa una cancel. Si ndio? Yes. Nani alielewa what I said? The reason as why we have left the cash. Because as accountant now, in reality, can you have bank cash available with the bank as an asset, then again you can overdraft? No, you take all your banks as one. So for us to have cash there and overdraft down here, it means overdraft is the bank balance, and this is cash in what? In hand. So in the balance sheet, I'll show that one as cash in hand. Then this one I'll use as bank balance. Sure. Then online, they're telling me the answer is 5620. Joy, I don't know where 220 is coming from. What is the balance? 5620. Uko. 5620. Joy, what was the 220 was for? Kuna kitu lete kwa capital reduction account? Iliweka. Oh, so then there is no problem. As much as we want to move, ordinary has been affected so many times. Ama? Check ordinary share capital. Or will survive. We reconcile. So it has been affected so many times. So let's that be the last one. Ordinary share capital account. In exam, you know what you do? See, ordinary nakonga on the credit. Sure. You pick your calculator. This is what credit you add. The debit ones, you do what? You less. The difference is what you get with the balance sheet. Being smart. See, share capital is accredited. So sum up the credit. Unena tuko number one, no capital, yes. Add. You add all the credits, then you subtract the debits. Yes, then the balance is what you take there. Then nobody will question you. So ordinary share capital. Okay, because your time. Remember, we are not done with the one question. Now 4 questions remaining. And the vigilator is walking around. Let's get 1 hour 30 minutes. Question 1. Balance brought down. Balance brought down. How much was the ordinary in the balance sheet, which your eyes is capable of seeing? 20. So it was 20. Now play with the journals. Where this ordinary, you bring them. Go to the journals. Journal 1, 2, like that. 1 out, 2 yes. 2 on the debit. So 2 on the debit, capital reduction. How much? 15. Journal 2 Roman 2, yes. Credit, cash book. Cash book 25. Journal 3 out. Journal 4, yes. Journal 3, oh, the 2, Journal 3 is there on the credit against 10%. 10% preference 2. Sure. Journal 4, yes, on the credit. Sure. Yes. Against debentures. That is debenture interest, whichever. 500. 4 Quisha. 5 no. No, 5 Roman 2. 5 Roman 2. Director's loan. 500. 500. Yes. Journal 6, no. Journal 7, no. 8, no. 9, no. 10. Vision. Okay. So balance carried down should always be this side. Give us that balance. Then now we want to do the entries the way we say we want to do them. So capital is how much? 10,500. Wake up. 10,500. Can we do the balance sheet to see how it will be? Let's do the statement of financial position. Let's do the statement of financial position. So unafuata hiyo yao. Zilikuwa written off unawatana na. The ones which were affected, you take the affected figures. The ones which were not touched, you leave them the way they are. So right there, wanajita nani? Ongeza limited. Ongeza limited. Statement of financial position. Every question takes how many minutes in the exam? 36. So this one you can do within 36. At 18. Nakuwa too smart. 18. Journals 5 minutes. Very possible. Simulisema yenye kufurahisha utaki. Na yenye kufurahisha au Kenya. Waniwe peke yako. Nataka mnakuwa somewhere. Kitu kikulemea unajua imelemea kila mtu. Unasema hata the marker must feel it. So you are not alone. So this is Gaza. We shall do a reconstruction. As at when? 20, 21. We can operate 2 columns, not a must. You can even operate 1, but let's do 2 for beautification purposes. So let's start from non-current assets. Unafuata tu hiyo yao. When wameleta issue, tunaleta hiyo issue yao. Where there is no problem, we don't create problems. So non-current assets, we have land. Land we never interfered with. Sure. I pick that value. So land is how much? 8,000. Buildings, they are adjusted to how much? 5,000. Check the current value Check the current value. So machinery. $2,000. Sure. Fisher. Only. Your investment will use that. Goodwill we wrote off, patents we wrote off. So add those three. Huh? 15,000. So this is 15,000. Yes, 15. When you make up, you buy, you know, scale up again as 2,000. Because how? Just not big. Current assets. Current assets. What about talking? We have inventory. Inventory is what interfered with. 64. Group in a balance. Where's the problem? So in example, when you get to examine, this is question. Question 4, Roman 2, Rama B. Ubaya usiende akitoka question 4B unaenda question 1C alafu unaenda question 2A. Bora ni question 4B alafu hapo chini fanye question 4A. Where's the problem? Because hapa babu yetu tumefika. Was there something serious to be computed? No. Now those are ticks. Those ones are just narrowing your difference in this part. Let us look at it before the ball. Where is the bit? Before time in the weekend. Next, after inventories, receivables, gap 36. Then there was cash. Cash we never touched. So bring it the way it is. Then there was bank. The bank turned out to be positive from overdraft. Sure. The one you got, what did you get? 56.20. Yes, we got 56.20. Sure. Correct. Add. How much? 15. 7. Therefore, total assets $30,720. Nani yako na issue kwa balance sheet up to where we have reached? That is okay. Your bank, please. Your bank. Is it an overdraft? No, the debit were more. The debit in the cash in that cash book means cash in. So the debits were more than the payments. So cash available, sure. All right, so let's go to equity. Equity and liabilities. Equity and liabilities. So equity, ordinary share capital. Need you money some few minutes ago. 10,500. You got 10,500. Under equity, there is preference. Your preference, preference they were exchanged with something. Check your journal 3. Check journal 3. Preference was changed from 10% to which percentage? Journal 3. 15%. So pick that 15. 15% preference. Preference share capital. How much? 6,000. Sure. Let's try to put on the ventures for equity. There was a capital reserve. We need to put up a capital reduction. Bring it here. So capital reserve from capital reduction account, we are saying we got how much? 27, 20. Share premium is also present in journal. Journal 2. It's only appearing once. Journal 2, Roman 2. Journal 2, Roman 2, there is share premium of 1,500. Shareholders, whatever, hiyo jina mnapenda kuipea, where at, wachana hiyo. Inaitwa shareholders fund. So add for me those equity. $27.20. This is 27. Online, I want to change the camera to the other side, so faster. Meanwhile, write non-current liabilities. I'm waiting for some people to finish. We only have one non-current liability, sure. Which one? The debentures. But debenture, they change the rate. So don't talk of 12. Instead, we talk of 14. So wake up of 14% debentures. So online, I hope now. So I can work it here. For non-current liabilities, we have 14% debentures. Which note do I check? Roman 2. 6,000. Let's put again to repair in Roman 3. Sure. So this one was just an exchange. Then we issued a fresh one. So it will be 6 plus the one we issued. What? How much? 2. Yes. So that one will be 8,000. 8. 8. Current liabilities. Because things like loan from directors, settled. Interest payable to debentures, settled. Accumulated losses, written off. Bank overdraft, it turn out ikakuwa bank positive. So the only thing we capture is which one? Sundry. Sundry payables. Right there, payables. So payables, was there that part which we paid? Note number 8. So total payables was 5180 minus 3180. 5180 minus 3180 is likely to be 2,000. And there is nothing. Total equity and liabilities. So total is 37.20. So that one was to give us how many marks? 8 marks. So if it is 8, any 8 at 1. Any 8 at 1. Ukipata it takes up 8 marks. So can we get 8 without struggling? You are the people to tell me which ones we are getting without struggling. What are we struggle? Without struggling, we get this, that. No. This. I'm about to learn. So each worker like it like it. Then apple chini. Your preference. Nilikuwa change hapa. So hapo tuachie kidogo. Alafu tupate payables. Let's just get payables. Hiyo ingine ni struggle. So without struggling, you can get 1, 2, 3, 4, 5, 6, 7. But if you put a 7/8, what else do you want? Eh? What else do you want? And the one mark. But I 7 points. Let's finish the question. Let's go to C. That is how that thing is marked. I'm talking from informed point of view. See, let's go to then your journals, any 20 at a half. It was how many marks? 10, yes. Any 20 correct entries at a half. Yes, you get 20, you get all ticks. Let's go to Roman C. Let's go to C. Let's go to C. So C, they were saying, Mohammed, you usually want to from the beginning. So before we read C, let's read number 10. In number 10, they were saying, it is estimated that under the new arrangement, the net profit before interest and tax for finance, wale wanafanya finance, si wale wanafanya nyinyi wote mnafanya finance kwa FM. Hiyo ndio mnaitanga what? EBIT kwa finance mnasemanga sana. Earnings before interest and in accounting, this is called profit before interest and tax. And further, ukiona kwa mtihani umeambiwa operating what? Profit. Operating profit is the profit. In fact, you uandike kwa roho ama uandike mahali. Next time watakwambia operating profit of the company was this. Sasa kwa hiyo story big. So wewe kama mtu wa alliance, sema tusema ni alliance. Wewe kama mtu wa alliance ujue operating profit is the profit before you charge interest and what? Tax. Okay. Sasa kesho unaenda, kesho ni Monday. Unaenda hapo kwa finance office kusikia akili yao. What was our operating profit before the last financial period? Then you question, why are you not having salary increment? It is estimated that under the new arrangement, the net profit before interest and tax will be 5 million per year. There will be no tax liability related to the company for the next 5 years. Okay. So required C, a statement showing how the anticipated profit under the new arrangement will be distributed to the various providers of capital. Who are the providers of capital? They are always three. There are three. Who are the providers of capital? So shareholders, ordinary shareholders and preference shareholders, the debenture holders. Correct. So what the examiner is asking, what is the order of priority of distributing profit to those three? Who comes first? Who comes next? Who comes last? Debentures comes first. Then preference dividends next. Ordinary wanakuwa wa mwisho. That is what is asking in other terms. So, to answer. So, we can call it a statement of profit distribution. Statement of profit distribution. So statement of profit distribution. So shillings are in thousands. So anticipated what? Anticipated PBIT. Wamesema itakuwa ngapi? 5 million. Give us here. So 5 million, do 5. Yes, 5 million. Then let me assume that there was tax rate. Though here they have said they will not be charged tax for how many years? 5. So if tax was there, then tax comes first. Between interest and profit before? No, interest first. Yes, so less debenture interest, less debenture, because we don't tax interest, debenture interest. So look for those debentures. It was 14%. In the new balance sheet, you check the new balance sheet, 14% of what? Of 8,000. So 14% of 8 is how much? 1120. Therefore, what you get is profit before what? Before tax. So that is profit before tax. Ile kupita mutapita. Hii group lazima tuko na graduation December. Hii group lazima graduate yote. Imagine mpaka December. Kwani kuna mtu atakuwa amekuonea? You will finish. In fact, hii April. Mpaka hata hiyo graduation ipate sasa uko na mbili. You are wondering which one you are there. So profit before tax, this is 38. Let's assume tax was there, though it was not there. No. In fact, sasa to examine. See, amesema tax will not be there for the next 5 years. So let's tax. Unamwandikia bracket if kwanga ingalikuwa. Tugoweke hapo, sio? Ubaya ikwe kwa hiyo statement kitu correct hiyo if any. So profit before tax still remains 3880. Then now you pay preference what? Oh, this is PAT. That is PAT, profit after tax, 3880. Then now you pay preference dividends. So check under the new balance sheet. Under the new balance sheet, 15%. So this is 15% of what? 6,000. So 15, a quarter of 5, that is 1,500. 900. Okay. Yeah, 900, sure. 900. Therefore, ordinary use wa the dividends. Wao wakijisikia kukula yote wakule, there is no problem. So you say profit available to who? Available to ordinary shareholders. They remain with how much? 29. And you get 2 marks. Any two at one. Any two in a, what is mark is this? 1, 2, 3. Any two. What are you any two? Otherwise, if I 5. So I need your 5 peke yake. Well, you want to be here? How come? Between the 3? Who's 3? Oh, between the debenture, preference, and ordinary. Wewe unaangalia mbali. Yeye anasema kama wewe ni advisor ama wewe ni investor, between ordinary, debentures and preference, unaweza chukua gani? For investment purposes. Of course, debentures, because they rank before, even in liquidation, debentures will rank for the refund of their loans before all this. So debentures is the best. Like it was one in the, how many companies are giving out debentures? Holding other factors constant, ceteris paribus. Proceed.
Something like discount, for instance.
Yes. Of course, whether you discount, what watakuwa affected by the, see, you are talking of the value of money. Yes, what watakuwa affected and how? Because why do you put your money there and time is moving? Holding those factors constant, everybody will suffer, and now the sufferability will depend who will suffer most. So debentures is best because of those other factors. In case of liquidation, watapata pesa yao, but time value for money, what wataumia. The last additional note. Kuna last additional note apart from where we have reached. Judith, at note 11. Yes, numbering, lakini kuna note 11. There will be no tax liability. Si ndio hii tumeringa hapa tukasema if any. Judith, niandikia hapa big subtopic. Oh, she's answering someone. Okay, then that is okay. Watu leo umepitia wapi? Andika external reconstruction. External reconstruction. External reconstruction. Stroke. Amalgamation. External reconstruction, stroke amalgamation. Stroke absorption. External reconstruction, amalgamation, absorption. Absorption. Do you deserve a break?
Yes.
Let's go for a small break. How many minutes? 3. Not 10 minutes. Let's go for 5, 6, 7 minutes break. When you walikuja kama umechelewa, you can call people you left back, nimefika. Then we be back online. Enda hapo nyuma, tafute maji, kunywa, come back. Hi, Mohammed, come back. I can see you going away. So we are back. Group. We are back. We are back. We are back. All right, so so online are back very well, so we can proceed. Recap for external reconstruction. External reconstruction. Let's start with that. We wrote three things: external, amalgamation, and absorption. So let's start with the external reconstruction. You say external reconstruction. This is a process. This is a process This is a process in which companies the apostrophe, not plural. This is a process in which a company's affairs are wound up for the illegal liquidation, WOU, wound up, and a new company is formed, to take over, the assets and liabilities, of the existing company, full stop. Another hyphen. Amalgamation, on the other hand, is the process whereby two or more entities are liquidated to form a new company. Full stop. Absorption, another paragraph. Absorption is the process. In which the operations of an existing entity is taken over. An existing entity is taken over by another existing entity. Weka hivi, bora mtaelewa. Voluntarily, another existing entity voluntarily, or through hostile acquisition. Full stop. Ebu check the three. Just check those three, how they differ. The external, amalgamation, and absorption. Iko difference. Marriage inakwanga amalgamation ama absorption. If you have understood what you have read. Marriage is absorption ama amalgamation. Huh? Amalgamation. So what did we say amalgamation is? Two or more firms are done what? Two are liquidated to form one. NB, for accounting purposes, comma, there is no distinction between external reconstruction, comma, amalgamation and absorption. Full stop. And that point should be home. So tukipata maswali usikie kwa hii swali ya kwanza walisema amalgamation, hii ingine wanatuambia absorption, hiyo ingine external reconstruction, one and the same. We account for them the same way. They are only different in reality and maybe even mumeandika. But for accounting, we do them the same way because we close the books, then another one is formed at the end of the day. In your past paper, check for me page 96. Page 96. I'm only scared of evening people because there is something I'm reading in a mood class, which I really wanted to change this. Each class will continue back at mwisho, but I really wanted to change it so that we start early. How wale wengine wakuje huku mbele because early morning unaanza 7. So unajua ukimix watu walianza 7 to 9 na watu wameanza 9, sio kuna tofauti. Naona watu wale morning nikiwaangalia wamechoka kidogo. Watu wa evening sasa ndio wameshika. Wako sawa, hana issue. Page 96, question 3. Question 3. Are you there? What were they saying? Explain 4 differences between an internal reconstruction and external reconstruction. So put that sitting. That is November 2016. November 2016. So Alice, November 2016, question 3A. Question 3A. So Alice is requesting I repeat the last point. The last point was NB. So NB, we said for accounting purposes, there is no distinction between external reconstruction, amalgamation, and absorption. Meaning, kwa swali ukipata examiner amesema they amalgamated, or one was absorbed, or there was external reconstruction, you account for them the same way. All right, so in that sitting, they were telling me to do 4 differences, and a couple distinctions or differences between internal and external reconstruction. Let's do something. Let's do something smart. We can draw. So you can have here. Make up a basis. So that is the basis of distinction. Then we can start with internal. So have here internal reconstruction. Then this side you have what? External reconstruction. Have something like that. So here we'll be writing number 1. Then we can say the basis of distinction. But before I go there, I want you to tell me 1, 2, from your observation, what you have observed since we started. Then we can discuss. Wacha hiyo maneno. Can we start? Yes, but let's discuss first from what you have seen since we started. What can you say about internal and external from what you have heard? Assuming hiyo kitu mwalimu angesema kwa class. Ati internal comes first. Yes, in external, there is new formation, while in internal there is no new formation. That is true. We are still discussing. Any other? Yes, you retain the ownership and the control for internal. External, when you have sold, the ownership ceases to be. Any other? Yes, internal is carried out without necessarily liquidating the company among the ones given online. Let's write basis of distinction. We can start even with the meaning. Meaning. So meaning for internal, you say it refers to the method. Refers to the method of corporate restructuring. Method of corporate restructuring. Method of corporate restructuring. Where an existing entity Corporate restructuring, where an existing entity reorganizes its capital structure. Reorganizes its capital structure internally. Reorganizes its capital structure internally. Then the other side, for external, you say, is one in which the company undergoing reconstruction, is liquidated, and its operations taken over, by the new formation. Full stop. Number two, you can talk of formation. So under internal, just say no new company is formed. No new company is formed. The other side, a new company is formed. Let's go to number three. Number three is capital reduction, right? Capital reduction. Then you say, under internal, you say it involves capital reduction. And waiver of external liabilities. The other side, you just say no capital reduction. People are going to the other side, so I'm gonna reduce capital. Isn't it meaning ngapi ni mwape? 3. We can proceed. Court approval, number 4. Court approval. So under internal, you say court approval is mandatory. You cannot start internal without court approval. So court approval is mandatory. Court approval is mandatory. Then the other side, you say only members resolution is required. Only members resolution is required. So 5, we can talk of transfer, which is the last. There can be many. Transfer of assets and liabilities. And internal, you say no transfer takes place. The other side, you say assets and liabilities are transferred to the new formation. Full stop. Those ones are enough. There can be many. We can create as many as you want. Even whoever undertakes, you can even talk of internal is normally carried out by receivers. External is carried out by liquidator. Even see you another point. Yes, internal is carried by a receiver. Hii ingine is normally taken over by liquidator. Wewe unaweza andika kwenye kufurahisha. Those ones are enough. Another effect down there, you can say the main concern during external reconstruction, the main concern, ile kitu muhimu, the main concern during external reconstruction, is on how to determine, the purchase consideration, how to determine the purchase consideration, i.e., the amount that the new formation, should pay to compensate. The new formation should pay to compensate. Kulipa should pay to compensate the entity, being taken over. Full stop. Full stop. Down there you say purchase consideration is determined using either of the following approaches. So when you want to determine purchase consideration, we have two methods. One, we have what is called net assets method. We have what is called the lump sum method, and we have something called net payment method. So for external reconstruction, hizo tutaandika tu labda utaambiwa explain the three methods labda hizo issue, but this is the one recommended. So this one is the one we apply mostly for external reconstruction. We will apply it silently without being told. So the last one is highly recommended for application. Kindly repeat for where are we? Online, mtu asaidie as a respond to what Mugenya is saying, please. Where are we? Down. Where are we? Yet network challenge, sawa. Mtu achukue tu picha hiyo tumeandika hapo. Your page, you just take a photo, then you send. What are you fun? Take a photo, tuma kwa group, utasaidia someone. So the main issue is on how to determine the purchase consideration. Once umejua hiyo, wewe na external hata utakuwa na issue. How do you determine purchase consideration? Assuming we have not mentioned those methods, even if you have mentioned, we have not explained. According to you, we want to buy another company. They are undergoing financial distress. Kama kampuni gani sasa hiyo unaweza? Which one? Which company can be purchased right now that we revive na ikuwe mzuri? Mumias. Mumias leo sasa unaweka hapo. KQ, Morina anasema KQ. Although Naivas imeanza kuwa na issue. Yes, they were continuing. Now, the people who brings those problems, cousins, eliminate cousins in your life. Wake up cousinless. They are always cousins. When you check all these corporates, actually when you check all of them, the cousins. The founders are another issue. You know, they know where they came from. Like it's cousin, because Naivas I know right now are cousin. That my father used to. What? So that's not the issue. So tell me, which method can we use to determine? You know, the other side, they will do the evaluation. That is true. Yes, when they want to sell, they will do valuation of the assets and all those things. Then now, if they give us the evaluation, it's not a must we pay as per the evaluation report. We can negotiate. So how will we determine the value to pay? Our unaenda tu unafunga jicho unasema this one 10 million. Hakuna kufikiria mbali. We are thinking just like normal people, not here first time. How will we determine the value to pay? Mary, tuseme tumetoka hapa na ni wewe ndio leader wetu, unafika pale wewe ndio utaongea na behalf. We want to buy that company, tumefika. The assets and liabilities. So we do valuation of the assets, we net off what? Liabilities. Then we negotiate from there. That is called the net asset what? Method. So Andika, you have number 1. Can we change this class to 2 p.m. to 4 or to 5? Oh, she has a good suggestion that sometimes during these remaining periods, we can get it to kuja asubuhi, we can get it to kuja hiyo jioni. Relax, hiyo tutafikia baadaye. Tusingie saa hii utapoteza spirit ya net asset. So andika net asset method. Net asset method. So you say under this method, purchase consideration is considered to be the difference. Under this method, hey, the issue is kidogo tu, you are helping someone, lakini wewe ni wa evening. Na huyu mtu labda ni sawa, wacha tuta transfer. So under this method, the purchase consideration is considered to be the difference. Considered to be the difference between the total value. Between the total value. The difference is considered to be the difference between the total value of assets acquired, and liabilities taken over. Assets acquired and liabilities taken over from the selling company. From the selling company. Full stop. Full stop. So that's called net asset method. Take the total assets, subtract all the liabilities. The difference is what you're supposed to do what? Pay. Let's go to lump sum. Lump sum method. Number 2. Lump sum method, however, number 2 is lump sum. You say the purchase consideration. Under that, you say purchase consideration. Purchase consideration is agreed upon by the parties. Is agreed upon by the parties. Agreed upon by the parties without taking into consideration. Without taking into consideration the values of assets and liabilities. The values of assets and liabilities. Then we go to number 3. Unaangalia tu unasema that reminds me. Last week, was it Friday? Yes. I attended a certain ilikuwa ni Rorashio, and when I saw it, this one came to my mind very fast. The net asset and lump sum. Hapa Kiambu, si ndio? Because it was in Kiambu. Dawari unaenda tu unapeana venye unajisikia. In our where I come from, hakuna story, inakuanga this method. Hata hakuna agreement. Kenye Mungu amekusaidia nayo. Yes, it's true. Maybe there's someone who is coming where I come from. In our place, there is nothing like dowry. You have to, ati ni process kubwa. Bora mnaishi kwa amani. Na Mungu awalinde. No problem. But me personally, I will not like my daughter to. Ati kenye Mungu amemsaidia nayo. Hiyo inakuwa hiyo ni lump sum, eh? At the blessings. Where is Karar? I was having some stories. I was told in Muslim, it is the lady who determines how much we brought. Kindly confirm. Yes, Fatima, can you confirm? Yes. So the lady determines how much. So I don't know if that is which method, but in Kiambu it is net asset. The sample doesn't value. And that is the one which me I can go for, because imagine so when you go section 6, graduation, like there's a friend. I remember it was in 2015. I had a friend, he was a student. I had a student in 2015. They joined. No, he joined in section 3, and the wife joined in section 1, I think. So this friend of mine, alikuwa anasoma, analipia wife CP at the same time. However, by that time he was doing his PhD, and the wife was almost going for masters. Then at that point, now they had to get married. Then now the story was giving me, which I believe to be true, is the one who even paid for her the high school. Then akampeleka parallel UN, na alikuwa anamlipia CPA. Alafu akienda hiyo siku ya rorashio aliambiwa wali negotiate sijui ngapi, ilikuwa nakuja around 1 million. Akasema sina. Akaambiwa, you know, you are marrying a graduate. So you are marrying a graduate. And you know overdraft. Wacha tuendelee, hiyo ni story for another day. Wacha tuendelee. Okay, someone has requested to repeat the lump sum method. Lump sum, we say, I'm repeating for you. The purchase consideration is agreed upon by the parties without taking into consideration the values of assets and what? Liabilities. All right, let's write net payment method. Net payment method. Net payment method. Net payment method. Then you say the purchase consideration is considered to be the sum of all the compensations to the providers of capital. Of all the compensations to the providers of capital. To the providers of capital, open a bracket, ordinary shareholders, comma, preference shareholders, and debenture holders. Full stop. Another hyphen. No, not a hyphen, just a continuation. The compensation The compensation may be in form of cash, debentures, or shares. Debentures or shares. Full stop. Full stop. So another hyphen, you say, in case the purchasing company, pays ya kulipa, pays or stroke incurs, liquidation costs, liquidation costs on behalf of the selling company, comma, then such costs should be treated and recognized as part of purchase consideration. Full stop. Full stop. NB, I'll explain that one. That method is the most critical. NB, you say net payment method is highly preferred for determining purchase consideration. Full stop. Hiyo ndio tutatumia. So allow me to expound on it. So what happens in net payment method, what they will do, they negotiate with these people. That ordinary shareholders, how much are you being owed in that company? What was your capital? That our capital may be, right now it is 10 million. Fine. We are giving you cash immediately of 6 million. Then for the balance of 4 million, you will join us. You know you need them because maybe the industry in which they are, sisi to the investors, but we don't have the knowledge. So we will give them what? Shares. So how to negotiate now? Debenture holders, how much is your balance? 5 million. Okay, ninyi atuwatai kwa kampuni yetu, tunapea cash to compensate. Preference, let's talk. So at the end of the day, they will sum up. You sum up, what did you give the debenture holders? How much did you give? All that. Then the total amount you have given the providers of capital, and providers are the debenture, the preference, and ordinary. Whatever you give them, either in form of shares, cash, or otherwise, is considered to be the purchase what? Consideration. So you add what you gave them in form of cash, shares, and debentures. Then that one will be your purchase consideration. What about assets? So assets are not being considered in this case. You don't check assets. Liabilities you take over. Rule 1, they take over all the assets and all the liabilities. So the assets and liabilities are still compensation. So that is how it operates. It's called net asset method. So at the end of the day, the amount is fully paid. That one reminds me. Kuna employer, my first employer, it was very funny by the way. Very funny. Munatembea. Unajua, when you are first employed, you know there are some employers wanajua kucheza na psychology. Kwanza ukiwa accountant, you know there are some accountants here who akipata job for the first time. Ni yeye ana handle petty cash. Hey, anaona anapewa story. Huyo mwenye alikuwa hapo, we don't trust. Sasa unajua sasa wewe ndio uko trusted. Mpaka mnatembeanga na mkubwa ati mmepanda hiyo range kila siku wapi. You are the next victim. So tulikuwa tunatembea na yeye, tukipita mahali mnakaa, amenunua chai, mmepewa receipt 1200. Kumbe ana record vitu nakula pole pole. At the end of the month, all which you have been eating when you are working together, they are added and subtracted from there, and life goes on. Process, subtopic. Process of external reconstruction. Process of external reconstruction. Process of external reconstruction. Okay, and I want you to be thorough. By the external, wakila reconstruction, external is standing a very good chance to be examined. Yes, high chances. So it's very funny the way they examine external. What happens in the process? Process mbili, though detailed. The first process, you close off all the books of the old company, the selling. So you close off the books, then you open the books of the new company. So the examiner, being a bad person, anakuambia close off the books of the old entity. Alafu fungue hizi zingine. So you don't know you are closing which books. Where are you? Ngoja ujione. Fungua karatasi. Take your paper. Before even we start writing, I just show you how those people can. Sometimes they can try to be bad. And so Miss Well, not required. Then we come back where we are. Let me look for one. You see how those people are. The way they are bad. So those questions are always open. Why am I not getting a question first? So that tukizisema unakuwa very keen and very cautious. Very keen. Bas, you're easy hapa. Check page 90. I don't know if that is which setting, but you just check page 90. And we are not reading anything. Wake it unasoma tu ni required. Open page 90. Are you in page 90? That question 3 uko mwisho required. Are you seeing it? Yeah. Wanasema the relevant words to close the books of Asara Limited. So you're the external reconstruction, I know. So unashindwa which are these ledgers which we are closing. So in the process are only 2, but detail. You close off the books, and when the examiner tells you, the journal entries to record the transactions, the new company. So you need to know which are the books which we are closing in the books of the selling company. And if you mess one in the selling, you will mess even in the new company. So you need to know which are the books we are closing, how do we close them, which are the books which we are opening, and how do we open them. So, your process umeshajua. As a process umejua. So you need to know the details. So process number 1, close off. Just a minute. And tuandike kwanza. Close off the books of the old company. Close off the books of the old company. The books of the old company, which includes books of the old company, which includes. So 1, realization account. Realization account. So kama kwa ile swali utaanza na hiyo. Na hivyo nimezipanga kwa ziende hivyo. So you start with the realization. So I'm not going to explain realization. It's a waste of time. Realization will come out when you're doing what? A question. Number 2, new companies account. New companies, company with apostrophe. New companies account. In bracket, purchasers account. Purchasers account. New companies account in brackets, purchasers account. to show how they were transacting with us during the transfer. Number which one? Number 3, sundry of SU, sundry members accounts. Sundry members accounts. Okay. Sundry members accounts. So sundry members, Roman 1. So when you make a sundry members accounts, have full column, then Roman 1, Roman 2, you need to know them. Ordinary sundry members. Ordinary sundry members. And Roman 2, preference sundry members. Then, now those are the books you will be closing. Labda kuna zingine kidogo examiner can want you to close like bank, those ones are not serious. The ones which you close, which must be closed are those books I've given you. Then in number 2, what online now of the choker. What one which is 1. 6 hours you have been here. Then I just want to leave at that stage, then we will pick from illustration. Then number 2. Number 2, open the books of the new company. Open the books of the new company. Open the books of the new company, which includes Roman 1. Hey, hello. Mr. What wanaandika tunaenda custom. I want to operate normally. Mtu akikupigia simu tunafunga, na unajua watu wa plot area hapo wamejua wewe ndio umefanya account. Kuna kampuni inataka kufungwa, tufanye aje? Unamwambia the process, ndio? Tell them to close. I don't know, a difficult time. Tell them to start closing the books of the old company as I can. We don't give details. So open the books of the new company, which includes Roman 1, journal entries to record the acquisition. Journal entries to record the acquisition. Journal entries to record the acquisition. And Roman 2, opening statement of financial position. Opening statement of financial position. Opening statement of financial position. Full stop. Evo. So that's the process, how it flows. Realization, the books of the new company, whoever is buying, you give us the sundry members, journal entries the other side, then you close with the balance sheet. So examiner wanakuwa rigid. Okay, sometimes they open up. Sometimes they try to open up to tell you the books they want. Sometimes they restrict, like in that question, they just tell you the books to close. So we would have found based on the vitabu ni gani and which ones you're supposed to do what? To open. Illustration. Our target is 3 questions in external. So to answer na hii, which one is this one? It was question 3 of May 2016, question 3. May 2016, question 3. The other one we'll do is 2018, November 2018. November 2018, question 2. Question 2, May 2018. Paper spirit question. Then the last one will be May 2021, not November. May 2021. May 2021, question 2. Question 2. Then hapo chini, assignment. Make assignment. Tukishafanya hizo 3, assignment itakuwa May 2019. May 2019, question 3B. So hii assignment peke yake itafanywa kwa revision. Revision itakuja May 2019, question 3B. Full stop. So class, I think you cannot absorb past that. The external are very long, so it's impossible. So thank you so much for your time. I can see people are very tired. Akina Beki wamechoka sana. You know, afternoon to discuss as time goes by. Let's discuss after we can set a date around 8th or 9th of April. So whether afternoon can work. So online you can log out. I want to end the class because I was recording. So I'll forward you the recording in the groups by tomorrow. So thank you. Have a nice and a blessed Sunday ahead. At which Sunday?